Hi guys, today is August 31, 2020, and stock futures are pointing to a higher open, but it came down a lot since yesterday. It was trading like up 150 points, and now it's trading only like plus 17 or plus 10 points. So I was actually surprised that stock futures were higher because market seems to be very overbought, and I would be very careful at establishing new positions at this point in this market. So let's jump to SPY, ETF for S&P 500, and it looks like SPY is breaking new highs every single day. And I mean, it looks like it's going higher, but as you can see here, RSI is very overbought here. So I would be very careful establishing a new position at this point, because this market can come down, and it can come down fast and hard. So be very careful establishing a new position or buying new things at this point of time. Okay, so let's jump to stocks. Let's start with Tesla. So Tesla and Apple actually are trading split adjusted, and the shares actually trading a little bit higher after the split adjusted. It was a split adjusted 5 to 1, so the price of Tesla is supposed to be $442.68, and it's trading pre-market $446 and around 75 cents, 446.75, something like that. So anyway, Tesla is very overbought as well, so I would be again very careful at buying Tesla at these levels, because Tesla is, I would expect it to come down, even though I'm a shareholder, but I would expect Tesla to come down before it can go higher, because it's sitting in a very much overbought territory on the news that it's gonna be a stock split, and obviously stock split is very good for the stock usually, after the stock split shares rise, but pre-stock split, Tesla shares ran like, I don't know, like 65% or something like that. So it's crazy, and I think I'm expecting shares to come down. I wouldn't establish new position in Tesla at this point. Same thing with Apple. Apple is trading split adjusted a little bit higher at $125.40 pre-market, but I also see this very much overbought before the split, and I think the shares may come down as well. So I would be very careful at establishing new positions in these two stocks. Big. So Big reported earnings on Friday, I believe, beat by 5 cents. Revenue beat as well. Comparable store sales were up 31%. Also announced a 500 million buyback. So reported really good earnings, but the stock dropped, and everybody was asking me why the stock dropped with really good earnings, but the stock came in very hot into this report. I mean, it was trading again at overbought. RSI was very high, so it has to had a perfect report. I mean, more than perfect report to maintain this price level. So it had to come down a little bit, but under $50, I would be in accumulation mode for Big, because the report was very good, and they announced the stock buyback, and I like Big a lot, and I think they will benefit from this environment, and I think under $50 I would be starting accumulating Big. Okay, HIBB. Hibbett Sports. It's an athletic clothes maker company, and reported spectacular earnings. Actually, 295 versus 115 expected, blew past the expectations. Revenue was also higher. E-commerce sales more than tripled. So this stock is really good. I mean, this company is firing on all cylinders, and I would be very inclined to purchase the shares if it can come down a little bit on this. I'm actually expecting a little bit of a sell-off in the market. So if the shares of the Hibbett come down, I would be a buyer, like closer to $30. GPS. So GPS reported also pretty good earnings, loss smaller than expected. Revenue also beat estimates, benefited to shift to a casual and athletic clothing. So the shares also came in very hot into this report, even though the chart looks good, because the 50-day moving average is crossing up 200-day moving average. So it's called the golden cross actually, but the shares are overbought right now, so I would be again very careful buying the stock. I would let it to come down a bit before I establish a new position. HPQ. So HPQ reported also really good earnings, beat estimates by 6 cents, revenue above. HP benefited from surge in demand for laptops as more people work from home. And again, a pretty good position for HPQ. And actually, I would be very interested to buy this company because I think the stock may go higher from here. And it's not really overbought as other companies. So I would be interested in buying this stock. Workday. So Workday came in at 84 cents for 60 cents expected. Revenue beat as well. Provided increased revenue forecast and really good company in this environment, but the shares jumped a lot. So it's trading RSI at 85 right now. So I would be again very careful establishing a new position. I would let it come down a little bit before I buy it, like closer to 225 maybe. I would be interested to buy this stock. This big gap, in my opinion, needs to be filled. So WDAY is a good company, but I would let it come down before I establish a new position. Dell. Dell Technologies. So reported $1.92, which is 52 cents better than expected. Revenue was also above. The company said that the remote work boosted demand for its notebooks, data center, and software products. And what can you say? I mean, great results from Dell, but again, it's very overbought, and I would let it to come down. I mean, it's a recurring theme because all these companies are crazy overbought right now, and I would be very careful in buying them. And there are good companies reporting tremendous results, but unfortunately, the stocks are just too high, and I would just wait for Dell to come down into like I would say closer to $60 at least before I consider buying it. Okay, ABT. So Abbott Laboratories remains on watch after it said, their COVID test has been recently approved by FDA, and that also hit the competitor companies like OraSure, Hologic, and it hit TMO. Okay, Thermo Fisher, and these companies came down on the report that the FDA approved the Abbott Laboratories rapid test, but I don't see how only one test will be available on the market. So I think all these companies, especially like OraSure, Hologic, and TMO, they fell on the report. Dell as well, they fell on this report, and I think could be. You could establish a pretty good starting position at these companies because they have fallen a lot on this report on Abbott. So there will be a lot more tests than Abbott, and other companies are also working on these COVID tests, and they will be on the market. So the shares have fallen for these companies, and it could be a very interesting buying opportunity for this for the shares of these companies. Okay, Okta. Okay, Okta is a software company, reported 7 cents per share versus 2 cent loss expected. This is a maker of identity management software. It's raised its full year forecast, but also took a cautious tone on a conference call, and the shares took a hit on in the last couple of days. And I think that if, there is a strong support line under $200 for Okta, and I would wait for this line to be tested before I buy shares. Okay, DraftKings, DKNG. Okay, DraftKings came down after Morgan Stanley downgraded both stocks DKNG and Penn National Gaming. Okay, both of these stocks were downgraded by Morgan Stanley to equal weight from overweight, saying that the stocks more than doubled in 2020 and investors' optimism may be too high. I actually disagree with this call. Pan National trading is a little bit high to me, but DKNG is in pretty good position to go higher to me. The shares, and I would be buying shares of DKNG at this point. Workhorse. Okay, so shares of this electric vehicle company is jumping this morning. because after they announced the strategic agreement with Hitachi. So that's good news for a Workhorse, because it adds the legitimacy to this company or to the stock. So the shares are trading higher and may actually go higher. It has a pretty good technical setup, and the stock may be bought at this point. WKHS, Beyond Meat. Okay, so Beyond Meat was upgraded by Citigroup this morning to neutral from sell, noting its underperformance since early July, and the fact that the stock is positioned better, has a better risk-reward ratio right now at these prices than before. So I actually like this company a lot, BYND, and I think the drop could be used as a buying opportunity for these shares. And even though it was upgraded this morning, it's not trading too high, and I think closer to 130, I would be a buyer for BYND. Okay, NEO shares are trading, is falling this morning a lot. Pre-market, after they said that they're offering 88.5 million shares priced at $17 each. So the stock slid 6.9% on Friday after they announced that they will be offering 75 million shares, and now they're offering 88.5 million shares instead of 75 million shares. So, and they're pricing it at $17. I mean, from the company's point of view, I actually agree with them. I would have done the same thing if I was like a board of directors of the company. I mean, the shares ran a lot, and it's a perfect time to do the secondary offering, but it hurts the investors, of course, because the shares will come down. And I would just, if you're establishing a new position, I would wait for shares to trade under like at least $17, closer to $15 before buying it. Okay. GE. Okay, so GE, JP Morgan analyst Stephen Tulsa removed its price target for GE, citing that the lack of visibility. And rating remains at neutral, and fair value of the stock is probably under $5. So I wouldn't buy GE, even though Jim Cramer at Mad Money was recommending it. I think on Friday, but I wouldn't buy GE, and I would trust Stephen Tulsa more on this because he's an established analyst and he made really good calls on GE in the previous couple of years. Okay, so I would stay away from this stock. Huge. Okay, FSD Pharma is jumping this morning. It's a smaller pharma company after announcing that it has submitted an investigational new drug application to FDA for its COVID-19 candidate. I mean, everyone is in their mother, and their mothers are doing like COVID-19 candidates and submitting applications. So again, I would be careful buying this stock after it jumps, but it could be an interesting spec buy or spec watch, in my opinion. So I would just watch this stock, HUGE. Okay, so speaking of COVID handling stocks, Moderna and Pfizer and BNTX are under pressure a little bit this morning because it was announced that their mRNA candidates require ultra low temperatures to store. And it's raising questions about storage and distribution, and so these stocks, Moderna, BNTX, are lower this morning on this news because it will require additional storage and distribution arrangements for their vaccine. And guess what? Inovio Pharmaceuticals could benefit from this development. So stock is trading pretty low. I think it's a very good spec buy, in my opinion. Okay, guys, that's it. Don't forget to subscribe to my channel, click the like button. I'll see you Thursday.